Russia's tanks are still rolling, missiles still flying, but beneath the firepower, its economy is on life support. And now, economists say they've done the math, and they have a date when Russia may finally run out of money to fight this war. When Russia invaded Ukraine in 2022, it wasn't just launching a military offensive, it unknowingly set off a financial time bomb. With frozen assets, plummeting oil revenues, and massive war expenses, the clock is ticking fast. Now, economists from around the world have begun zeroing in on the moment when the Kremlin's last dollar could drop. So, today, we dig into the hidden war, the economic collapse unfolding inside the Russian Federation. How much money is left in Putin's war chest? What's keeping it afloat? And just how soon could everything come crashing down? Let's break it down. Russia is now waging war on two brutal fronts, one in Ukraine and one at home, against a collapsing economy. From the very start of the invasion, a clock started ticking, and it's one that even Russian planners failed to hear. The war was supposed to last just 3 days. That was the plan, a quick decapitation strike to seize Kiev. Instead, it turned into a grinding, years-long conflict that's draining Russian finances dry. Economists are now warning that Russia may be trapped in the worst possible scenario, unable to stop fighting but increasingly unable to continue. And one thing is absolutely clear, the war chest is nearly empty. When the war began, Russia held what seemed like a strong hand. It had already annexed Crimea, controlled parts of eastern Ukraine through proxies, and had a military considered one of the world's best. Plus, it was making billions of energy exports. But one critical miscalculation was leaving more than $300 billion, nearly half of its total foreign reserves, sitting in foreign banks. Russia never truly believed the West would freeze it. They did. The US, Europe, and Japan swiftly moved, locking down $300 to $330 billion of Russia's $600 billion war reserves. Much of this was held in Belgium by Euroclear, which interestingly has been taxing the interest on it and funneling that money to Ukraine. Only about $5 billion was held in the US and the rest in other Western aligned countries. So, with half its cash frozen abroad, Russia turned to its national wealth fund, built from years of oil and gas profits. Before the war, this domestic fund stood at around $112.7 billion. Now, as of June 2025, it's estimated to be just $21 billion and shrinking daily. One major drain on the fund, the need to recruit more soldiers. Putin is stuck in a political trap. He needs more boots on the ground to make gains, but conscription is politically dangerous, so instead, he's offering massive enlistment bonuses to attract volunteers, often from poor or minority regions. To keep the war machine fed, Russia is now paying an average sign-on bonus of $15,500, which equals a year's salary in many parts of the country. In some regions, that bonus can rise to $20,000 to $38,000. That's led to a stunning figure, $22 million per day, or over $8 billion annually, is being spent just on recruitment incentives. And here's the kicker. About 75% of this cost falls on regional governments, whose budgets are largely subsidized by, the federal budget and the National Wealth Fund. It's a financial feedback loop. The Kremlin is draining its rainy day savings just to keep up enlistment. So how hasn't this already broken the budget? Simple. Most of the bonuses aren't paid upfront. Recruits get paid only after completing a certain length of service, and many of those receiving the largest bonuses are sent into the most dangerous combat zone. It's a grim equation. If you don't survive long enough, the Kremlin doesn't have to pay you. Meanwhile, the Russian government has started dipping into the fund to cover growing budget shortfalls. In May 2025, the finance ministry withdrew $500 million to plug a federal deficit. Billions more have gone to infrastructure projects, including $16.5 billion for high-speed rail between Moscow and St. Petersburg, $85 million for aircraft, $4 billion for new metro trains in St. Petersburg, and unknown billions into classified military and intelligence programs. After all that, estimates say that Russia's National Wealth Fund is hovering around $21 billion. And remember, that's not just for war. It's supposed to cover budget shortfalls, support infrastructure, and stabilize the economy. The reserves of physical gold have also been drawn down from 400 metric tons to just 139.5 metric tons. Russia isn't funding the entire war from this wealth fund, but the fund has acted as a critical buffer, especially as oil prices have dropped. Currently, Russian crude is trading at $52 per barrel, with Europe poised to lower the cap to $45. But the Russian budget needs oil to be at 69.70 just to stay balanced. If prices stay this low, the wealth fund could be gone in 12 months. Russia's workaround, a massive shadow fleet of oil tankers designed to dodge sanctions. The Grey Fleet hides ownership and origin via legal loopholes and flag hopping. The Dark Fleet, estimated at 1,000 ships, disables GPS tracking and falsifies documents. But international pressure, improved monitoring, and AI surveillance are starting to crack down. Use of shadow tankers fell from 81% of exports in January to 65% in April. And Russia's fossil fuel revenues dropped 6% month over month despite selling more volume. Ukraine has been hammering Russian oil infrastructure with drones, especially refineries and storage facilities. These strikes have caused bottlenecks and forced shutdowns in Ryazan, Volgograd, Syzran, Astrakhan, and even Ust-Luga. Refineries are incredibly difficult and expensive to repair. Even minor hits can shut them down for months. And here's the real problem. Russia relies heavily on Western technology for extraction and refining. Once parts break or equipment fails, there's no easy fix under sanctions. Oil production is already dropping, and once a well is sealed, reopening it isn't cheap or simple. Sealed wells require concrete plugs to be removed and often need water flooding systems restarted. It's costly, time consuming, and dangerous, especially with limited funding. According to industry experts, even if prices rise again, restarting those wells won't happen overnight. That means lost production capacity, lost revenue, and more pressure on the war budget. And even the oil Russia does manage to extract faces hurdles. Indian and Chinese ports, under threat of secondary sanctions, are turning away tankers. Up to one-fifth of Russia's entire tanker fleet is reportedly stranded, with no place to offload their cargo. This oil is now being stored aboard aging ships, creating what some have called a floating environmental time bomb. All signs point to this. If current trends hold, Russia's national wealth fund could be fully drained within 12 to 18 months. This won't stop the war overnight, but it will force Russia to make deeper budget cuts, potentially gutting social programs, delaying payments, and stoking internal unrest. Already, welfare programs have been slashed, and the government is bracing for the return of hundreds of thousands of veterans. A politically volatile group, it's a perfect storm, economic collapse, military fatigue, and growing political risk. And it all leads to one haunting question. So now we know the numbers, and they don't lie. Russia's war machine is burning cash faster than it's winning ground. The real question isn't if the money runs out, it's what happens after it does. Do you think economic collapse will force Putin to pull out, or will it push Russia towards something even more dangerous? Drop your thoughts in the comments. We read them all, and your insight could be featured in our next breakdown. Stay informed, stay sharp,